Your heads up traders on Wednesday, the 22nd, after market, probably about 20 minutes after the cash market closes, that's 6:20 in the morning Eastern Standard Time. Nvidia will be coming out with their quarterly numbers. They were going to be reporting the Q1 2025 period. Obviously, a very, very important stock. I guess the market has seen them lacking a bit of a catalyst recently. You can see that in the price action. They've had a very good run this year. Obviously, the stock's up about 90% year to date, but most of those gains came through in Q1 after the Q4 numbers that came through out in February. The stock traded up into $974, so a trade lower, then traded back up into the GTC conference, which took place on the 18th to 21st of March. But after that point, we did see a bit of a sell-on fact playing through. The stock traded from around 967 down to 756, so 21% drawdown in that situation. But since that time, we've had a really nice melt up to where we're back to $943 in the top end of the range that it's found itself recently in. Obviously, if we have a look at the implied volatility in the market, in the options market, the market's expecting about an 8% move on the day. Now, it's somewhat lower than what we saw in the prior reporting period. We went in expecting in February the stock to move about 10.9%. Obviously, what transpired was a 16% move. But this time around, we are expecting a slightly lower move of 8% plus or minus. Now, when you've got a market cap of $2.32 trillion, an 8% move equates to still $185 billion of gained or lost market cap, which is staggering. So, obviously, a potential big influence on markets. It also has a 5.2% weighting on the S&P. So if we were to see an 8% move play out, that equates to about a 40 basis point move in S&P futures after hours, obviously a bit more for the NASDAQ. But the spillover effect into some other chip names and AI-related names is obviously very important. Names like Marvell, ARM, Broadcom, Amazon, Meta, into the Qs and obviously NASDAQ futures. And the spillover then into other markets, we were to see some big powerful moves playing through into rates, into risk FX, and also commodities could be there as well. So it is something we're watching very, very closely indeed. Now, the stock is obviously quite loved by the market. Yeah, if you have a look at the analyst ratings, there's 68 analysts who cover this, 67 have got a buy and one hold. There's probably a sort of look at names like Tencent who are even more loved. But I guess probably a better way to look at it is in the options market in its skew. And if we have a look at 1 month 25 delta calls, they're trading pretty much equal with what we're seeing in puts at the moment. Now, if we go back to where we were a month or so ago, we saw call options trading about a 10-volt premium to puts. So the market at the time was saying, well, if we're going to see a move, it's going to be much, much more explosive to the upside than downside. And we're a much more sort of equilibrium level at the moment. So the market seems to be lacking a catalyst. Now, that catalyst could come from the numbers here. If we have a look at what's expected in terms of earnings for Q1, so they can start with revenue. I think they did guide in the prior quarter period for about $24 billion, give or take 2%. If we have a look at where the sell side are, they're looking for $24.61 billion of revenue from the company. The buy side, though, the sort of hedge fund, pension funds, fund managers, etc., have got revenue coming out about $26 billion. So I suspect that's probably the number that they need to beat. And in terms of guidance for Q2 2025, the sell side have got $26.72 billion worth of revenue expected. The buy side are a little bit higher at $28 billion. So again, they'll probably need to beat that $28 billion. Now, we know they're going to beat revenue. They always do. If we have a look at the last 8 reporting periods, they've beaten revenue by an average of 7.3%. They've beaten on earnings per share every quarter over the last 8, except in Q3 of 2022. But they've beaten by an average of 14.2%. So the question is how big a beat is it going to be? The other factor we need to look at is gross margins. You're looking at a stock that has 76% gross margins. We're expecting that to sort of push up to 77%. So obviously very healthy margins. But going forward into Q2 and beyond for the rest of the year, you've got the market is expecting those gross margins to sort of plateau and sort of trough around 75%. So obviously something we're watching very closely. As we are with data centers, obviously it's key revenue and sales source. The market is expecting data centers to print Q1 revenue of $20.96 billion and then into Q2 something around $22.69. The buy side obviously a little bit higher than that point as well. So we should expect to see some big beats. The question is will it beat that buy side target we've been seeing? The other factor is what they say in their post-market conference where Jensen Huang will be stepping up. Obviously, big market share. What are they going to say about containing that? Growth going forward, levels of CapEx, the Blackwell GPUs, which they're going to be rolling out through the year. They've got big buys there of Meta, Microsoft, AWS, those kind of names. how's that progressing, as well as some of the other chips, the B300, for example. So we want to know a lot about what's going on there. But after GTC, the market is saying perhaps we've got a bit of an oversupplied chip market. Perhaps they're lacking a bit of a catalyst. That could change this reporting period. So heads up traders, Nvidia is clearly a risk event for markets. It could have some big moves in the after hours, which could spill out into other asset classes as well. Pepperstone clients can trade Nvidia in the post-market session with our new 24-hour share CFDs. So do reach out for the team at Pepperstone if you want more information about trading Nvidia or other stocks in the after hours as well.